All right, here we are. It's what the FICC. What the FICC, man? Spencer Israel here with Ian Cully, head of FICC at All Star Charts. If you don't know what FICC is, Ian, what's FICC?
Fixed income, commodities, and currencies.
All right, today we're focusing on the last letter of that acronym, the currencies part. We're talking about the dollar, but also emerging market currencies and what they can tell us about the general state of the markets and other asset classes for that matter. So Ian has one specific emerging markets index that he looks at as sort of like a cheat code of information, but we'll get to that in a little bit. Ian, let's start with looking at the US dollar here. First off, why do you pay so much attention to the US dollar index? Because I look at it, I was just saying I look at it, but I don't like it's on my screens, but I don't like look at it. You know what I mean? Like I see whether it's gone up or it's gone down, but I don't like look at it deeply like you do. So why?
It tends to have a strong negative correlation with risk assets, specifically stocks and just global equities in general. And this first chart here really shows, it highlights, as the dollar falls, those red arrows, the top line there, global risk assets, the MSCI All Country World Index, ACWI, catches higher. Right? Risk assets, equities, enjoy a weaker dollar. It's a tailwind. And on the flip side, a stronger dollar acts as a headwind. That's what we saw all of last year. So as we see this, potential failed breakdown take place, and the dollar start to rip higher over the past couple of weeks, it really raises the question, are we going to see a strong pullback in the U.S., major U.S. Stock indexes? We're already starting to see a correction. We're already starting a correction in tech, and the leadership is starting to shift down the cap scale from large cap tech to smaller cap stocks and to more cyclical areas of the market, because the dollar's been catching higher along with interest rates, and those are the areas of the market that tend to enjoy rising rates. So you've got to pay attention to what's happening with the dollar here, because if the dollar index, if this failed breakdown really starts to rip higher, it could be a more severe correction, at least at the index level for stocks.
All right. Good answer.
That's why I pay attention to the dollar, and that's why I'm paying attention particularly right now. I mean, here we zoom out and look at the US dollar index. It's just chopping around, this key level around, let's call it 102, 103. As we zoom in, we get some clear levels to monitor on a tactical basis. But just, it's chopping around these former highs here from 2016 and 2020. Again, if it gets going here and we're heading back up to the highs from last year, you got to believe that stocks are gonna feel that. They're gonna feel that headwind. Zooming in a little bit on the daily chart over the past 2 years, that 99 level now, let's call it 100, seems to be the floor. Again, 105 remains the ceiling here of this I don't want to say 7-8 month range. And again, zooming back in on this potential failed breakdown, that 101, 1050 level, if you want to call it, that's the level. We get back below 101, stocks are doing well. Not only energy or industrial names, but growth is probably doing well. And the indexes are catching higher as well. Now,
Okay,
on the flip side, Spencer, if we get back above this 103.50, we get back above the July pivot highs, I think stocks are under pressure, and to take it one step further, we get back above 105, and the dollar index is printing fresh year-to-date highs. later in the fall, I think
Watch out. Yeah.
things get really interesting. Things
All
get
right.
really interesting.
Okay, so let's bring it to the rest of the currency forex universe here, and let's put this in context with what's happening with other global currencies, because we know the dollar has been sort of just hanging out in the range that you kind of outlined there, but what what's happening with the rest of these currencies here?
So here we got a triple pane chart. We have the US dollar index up top. In the middle pane, we have our G10 currency index. It adds a few additional developed market currencies, some commodity currencies. They tend to track each other. And I look at these two indexes for confirmation, right? And
Wait, can I interrupt you for a second?
Yeah.
Thank you very much to the last Geo man on the chat. I didn't even notice.
What?
We got our names reversed, man. I'm Ian, you're Spencer.
I don't see it here. I don't see it here. Is it in the chat? Is it on the screen? Or
yeah, I'm Ian today. You're Spencer. All right.
Take it away, Ian.
Just kidding. Okay. But anyway, back to the CEW.
This chart here is all about confirmation. Right. In the lower pane, we have a broad measure of dollar of the US dollar using an AD line, 30 pairs, 29 pairs. Now, dollar broke down again earlier in the year. G10 currencies started to break down. AD line never broke down. And today it's actually printing fresh highs. Right? It's back above its October pivot high. So we're seeing broad strength beneath the surface, not broad weakness, and that supports a rally in the dollar. Right? So this US dollar potential failed breakdown might have legs. Right? We might see a rally here, and so I look at CEW in particular to get a good read on emerging market currencies, and that's really what we're seeing here in this AD line catching higher. We're seeing emerging market currencies and the weakness there, supporting this advance in the AD line. And it's not surprising that we got a failed breakout.
CW. This is the ETF that you told me is like your information cheat code, right?
Mm-hmm.
Yeah. So this is the Wisdom Tree Emerging Currency Strategy Fund. The ticker is CEW, and you're not necessarily like using it like to buy or sell, although you could. You're using it for information, right? What is so critical about how do you use this and what makes it so important?
I use it for confirmation. I use it for, again, a read on breadth, dollar strength, the breadth of strength or weakness in the US dollar. And you absolutely can trade this. You can express a bearish dollar thesis by buying CEW. Absolutely, 100%. For today, it's not about buying or selling this index. It's more about the information that it's providing, which is, we're not seeing broad dollar weakness. We're actually seeing the opposite. We're seeing broad dollar strength. So today I wanted to run through all the individual components of CEW and kind of get a look at, where we are seeing some pockets of dollar weakness and where we're seeing those pockets of strength.
So the CEW is a basket of currencies. It's got currencies from Latin America, currencies from Europe, Middle East, Africa, and Asia. So basically everything, every emerging market lumped into one, essentially, right? That's the idea here.
It is. The ruble's not in there. I'm sure the ruble was in there before.
No. Oh, I really? I think
their
website says it still is.
Oh,
but
it is?
I would understand why it's not.
It's just been all over the place since war broke out. But here's another a reason why I pay close attention to this. This is the CEW Emerging Currency Fund. again, overlaid with the emerging markets ex-China ETF, EMXC, and you can see they tend to move together. I can look at this chart and say, hey, Ian, Spencer, this is just a dollar story. Yeah, perhaps. I mean, I think that's fair. But it's nevertheless, it's interesting to see how closely these two ETFs move with each other. So I think, it really raises a question of whether we're going to see a failed breakout here in EMXC if the CEW continues to fall.
So yeah, what is the CW showing to you right now?
Well, we got failed breakout. Failed breakout here above the pivot highs from last spring. Never hit overbought, which I like to see that. I like that overbought reading on breakouts, or at least preceding the breakout. Never materialized. That's just telling me that the bears are still in control. At the same time, when we zoom out, it violated a multi-year downtrend line. We can zoom out even further. This lines up with a decade-long downtrend line. So there's a potential trend reversal underway. Right now, it's messy, and tactically, the trend is favoring the bears. It's sideways to lower right now.
Okay.
And we get that when we start ripping through all the individual currencies.
So let's do that.
First up, South African Rand. South African Rand recently posted, the dollar Rand posted a new all-time high, above 1950, I believe is the level. It's slipping back below, it's been chopping sideways, but, it's starting to reclaim that 1850 level back above these, the highs from last fall and the highs from earlier this spring. A lot of action, a lot of price action around this 1858 level. As long as it's above there, I think it's heading back up to retest those all-time highs around 1975, and could go even further. This is if the dollar index is most likely above 105. Think of it that way. But it's definitely not weak. The dollar is definitely not weak against the Rand. And here's a chart showing those recent new all-time highs. I think I had a post back right before this broke out. It's like, if you want to buy the dollar, buy the dollar ZAR. That was the play, and it went up and it hit our initial target in 1975. Next, we got the Chinese yuan. All right, so I see a big base here. I see a multi-year base. This, all the way over to the left side of the chart, we can maybe draw a left shoulder, and this is the head here in 2021. Maybe carve out a right shoulder here, if you like, and call it an inverted head and shoulders pattern. Whatever, it doesn't matter. If it's above 720, I think the path of least resistance is higher towards 775. Again, dollar strength. So we're seeing the first two charts, the dollar's not weak. Dollar is not weak against these two currencies.
Yeah, I'm seeing like a clear divergence here between the first two and maybe like these next couple ones, and then a bunch of the other emerging market currencies. It seems to be the dollar is clearly strong against some currencies and weak against others. So let's keep going.
Yeah, absolutely. Here's the Indian rupee, continuing to challenge this 8350 level here. A couple false breakouts over the past 7 or 8 months. If and when it takes out this level, I think it rips higher up towards 86, 87. Nice tight consolidation here. Broke that parabolic advance, but remains in here still in a bullish regime. So bulls are in control of this market. And again, if and when it's above 8350, the path of least resistance is higher for the dollar against the rupee.
Just to clarify, are you do you trade all these pairs? No, or maybe not all of them, but some of them, or
Some of them.
is this mostly an informational thing for you?
Yes, some of them. So we're going to start getting into some pairs that I
Okay.
do not trade. I definitely trade the South African rand. I haven't traded the rupee. I haven't traded the Korean won. I traded the Singapore dollar a number of times. And it just comes down to comfort. I just, if I don't, I tend to trade those currencies that I'm most comfortable with. I tend to stick to the majors.
Yeah.
I don't trade the exotics very often. And that's what we're going to get to when we get to the Malaysian ringgit, the Thai baht, and some of the others, the Chilean peso, the Colombian
Right.
peso. I don't trade those. This is
Yeah.
more for information.
So this chart though, the dollar won looks very different than the first few charts you showed.
It does, but at the same time, it's, I see a constructive basing pattern after a pullback. Dollar Korean won above, 1350, and I think it's running back up to 1450. Running back up to retest those highs from last fall.
So not as bearish. Okay.
Yeah, it's we'll see. Like, it's still the thing is, as we flip through these charts, we're going to see a lot of bearish regimes on the dailies. A lot of 14-day RSI momentum regimes that remain bearish. So no clear indication of trend reversals, but these basing formations that we're seeing in these emerging market currencies, the dollar versus these emerging market currencies, are constructive. Next up, Thai baht. As long as the Thai baht's above, let's say 34.95, path of least resistance is higher, up towards 36. This again, like, it's in a bullish regime, and these are a series of higher lows. This is bulls continue to step in and drive prices higher, raising that floor. So as long as it's above, again, around 34.95.
Do you? I know you're primarily a futures and forex trader, but would you use these charts as a signal, as like a bullish or bearish signal to look at like equities in these countries? Or could you?
No, I look at the individual ETFs for
Okay.
these countries priced in US dollars. And I also look at the indexes priced in local. I don't personally trade equities
But you could use this
outside
as,
of the US unless,
yeah.
I trade ADRs.
Well,
But
sure. Same idea, right?
technically you absolutely could.
Yeah, same idea.
Um, when I look at these currency pairs, I think of investors and traders in these particular areas of the world hedging their currency risk. That's just how I imagine these charts could be used. But also that, look, I love this chart. This is the Thai baht. Now I've inverted it. I've inverted this chart here to put the Thai baht in the numerator, and we overlay it with the S&P 500. It's the Thai baht bottoms and catches higher along with the S&P. What's interesting is the S&P's had an amazing first half, while the Thai baht peaked middle of January. So there's a divergence here. How's it going to play out? But to see some corrective action in the S&P, which we're starting to see, isn't surprising. It fits what we're seeing in the currency market.
These are some exotic currency pairs, man.
Yeah. So yeah, again, I don't trade the Malaysian ringgit, but I mean, it's information. It's information. The dollar is still hanging tough. I see this as a constructive base. Again, we have this polarity zone acted as resistance around 455. It's now acting as support above there. And, I think it heads back up to those November highs, those highs from last fall. Again, remember the dollar index peaked in late September. So, getting back up around there is like the dollar index heading back up towards, what was it, 114.
Yeah. So this is just an exercise in just digging into the weeds a little bit. Like you could just look at the CEW and call it a day, but Ian's
You,
obviously going
you,
going
you,
deep inside.
you absolutely could. But what's
Yeah.
interesting is I see a lot of strength in, in a handful of currencies. For instance, the Mexican peso. I mean, it's hard to find any currency in the world that was as strong as the Mexican peso last year. I mean, the British pound was retesting its all-time lows. It went back and retested its all-time lows. The peso dollar was carving out a multi-year head and shoulders top versus the peso, broke down, reached our measured target, and is now starting to consolidate below that 1750 level, which also coincides with the 2014 lows. Clear downtrend for the dollar versus the Mexican peso. Now, see how different this looks
Yeah,
than
extremely.
the Malaysian ringgit, or even the Filipino peso that's carving out a base over a former resistance level. Than say the Korean won that's carving out a nice base here versus the rupee that's consolidating with a strong underlying uptrend. Very, very, very different picture. Brazilian real, kind of similar story. Definitely not as strong as the peso. Really challenging this former support level here around 42. Keeps pounding this level, can't really manage to break down. But I mean, this is a nice sideways consolidation. Here's a zoomed in look there. If and when it gets below 42, obviously the path of least resistance is lower. It's still in a bearish regime here on the 14-day RSI. It's interesting. It's interesting to see that strength in the Latin American currencies, but it's not all the Latin American currencies. Here's the dollar Chilean peso carving out a nice base here. It gets back above 878. We're heading back up potentially to 995. And then looking at the Colombian peso, kind of similar picture here. Look very, very, very similar. So again, a couple of currencies look really, really strong against the dollar, but for the most part, it's just not happening. The dollar is strong. These pullbacks that we've seen over the past 10, 11 months, almost year, have paused, and we're seeing a lot of constructive basing formations take place beneath the surface of CEW. That's basically the message. Here's the dollar Polish zloty.
The zloty. Oh,
The zloty. I know I butchered that one.
I have some zlotys somewhere.
Do you really? You got some zlotys? Nice.
I was in Poland many years ago, and I took some home. I don't know where they are, but they're very colorful, very pretty.
Beautiful country.
Yeah.
This is interesting. Looks a lot like the U.S. dollar index. Looks a lot like the U.S. dollar index. But what's interesting is the zloty is below that 61.8% retracement level from the move off of the 2021 lows. Dollar index has not resolved below that level. That's at 99/100 level and the dollar index. So dollar struggling against this, European emerging market currency that's still in a bearish regime. So bears are in control here.
I have to admit, this doesn't interest me, but the next one does. This is probably the most interesting currency chart out there right now.
This is one I really wish I traded.
Yeah.
I really wish I traded this one.
Yeah.
Could have got this one down around 6, 7. And and 3150 might be in the cards for the dollar versus the lira.
Look at
Um,
the movement. Look at the volatility in this one. Oh my goodness.
I know, I know. Um, and I love the bullish regime. I know this is an extreme example, but that the old saying that a market can get overbought and stay overbought. I mean, this is a great example of that. It's the U.S. dollar, Turkish lira has been overbought since March. So
That
that
is
might be a
the
record. I don't know.
that is the limitation of RSI is it can tell you if an asset is overbought or oversold, but it can't tell you how long it'll be that way or stay that way. So there was a question in the chat from Fraley. Do you know if inflation is driving the Asian markets, or is it a variety of things? First off, inflation isn't actually that bad in Asia. It's much worse in Europe, going off the most recent data. We got some data this morning out of China that was deflationary, which is not a great sign, generally speaking. Would rather have inflation than deflation. So I don't think it's an inflation story. I'm looking at the inflation numbers right now across Asia. South Korea 2.3%. Indonesia 3%, Japan 3.3%, Singapore 4.5%. So, and those are all far lower than Europe right now. So I don't think it's in a inflation story with regards to the Asian. Although maybe it is. I don't know. What do you think?
I think it just has to do with the interest rates, the Fed
Yeah,
hiking. Yeah, just the interest rate differentials. I think that's
okay.
that's been that's been the dominant fundamental driver over the past year or so. At least with the developed European currencies. I think it's the same case here. But I mean, the main takeaway is that we got a failed breakout in CEW, and we look beneath the surface. Dollar looks very constructive against the vast majority of the components of this index.
All right. All right. Hope you guys enjoyed that deep dive into emerging market currencies, some of which I frankly didn't even know existed until, or at least the currency pairs. I didn't realize they were measured against the dollar, but I guess I should have. I'm too busy focusing on the majors, right? The euro, the pound. I guess the yuan is pretty major. I guess that's kind of it.
Yeah, I mean, and you
Yeah,
can do that, and you can get a lot of
yeah,
information with that. Like this one chart here, the triple pane chart with our US dollar AD line on on
yeah,
the bottom pane, it really tells the story. And you can just look at CEW if you want. It's like looking at the Dow
again.
Jones Industrial Average.
Yeah,
You
yeah,
can just look at it, or you can flip through the 30 components. It only take a few minutes and get a really good sense of what's going on in that index. You can do the same with CEW.
yep. All right. Okay, guys, if you have any requests as far as what you want us to cover on this show, we obviously cover the gamut of Forex, fixed income, bonds, and commodities and futures. So anything in that realm you want us to discuss, drop one in the chat. We can cover it on a future show. We do the show every single Wednesday, every single Friday, 11:30 a.m. Eastern time, right here on Stock Market TV. And we do take requests. Any questions, comments, concerns, email us. The email is at the bottom of the screen. Questions at stockmarketmedia.com. You can give your request there if you want. Hey, while you're watching, you know what I would appreciate if you just drop us a like, hit that like button, the little thumbs up, looks like that. We'd appreciate that. If you want to subscribe, if you haven't already, we'd appreciate that as well. And that's it. That's all I got. Any final thoughts?
Just watch out for that dollar, 103.50 and 105. Those are the levels.
Remember, dollar goes down, stocks go up. Dollar goes up, stocks go down.
Yeah.
Have a good one, everyone.
All right. Thanks for watching.